All right, what is going on, Discord and YouTube family, and welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is August the 3rd, 2025, year of our Lord, and we will be breaking down, as per usual, we'll be breaking down the S&P 500, the NASDAQ, and the Dow Jones futures. We'll be looking at the monthly, the 3 month, the monthly, the weekly, daily, 4 hour, and then when we get down to the 4 hour, I'll break down my levels on the week. I hope you guys had a great week. Hope you had a great month. Friday marked the last month or marked the last day in the month of July, and we ended with a little bit of fireworks to the downside. So I'll be breaking down my thoughts on that. We'll go through some earnings stuff and then some news, and then we'll kind of get you guys out of here. I do also want to bring up the volatility index, which I haven't really pulled up on my chart, but I can easily switch to it. So without further ado, let's jump right into the charts. All right, we move over here to the S&P 500. We're looking at the 3 month time frame. The reason why I like to start at the 3 month time frame is mostly because what it does is it gives you kind of a bird's eye view. So you're not locked in on the 1 hour, 5 minute, 15 minute, 30 second. You can kind of zoom out and see how strong this uptrend has been over the last quarter, which is 3 months, right? So we're looking at 3 months. We have a month or basically 2 months left inside of this 3 month candle. You can see without a shadow of a doubt, even though we're getting a little bit of a selling at the high, you can see that we haven't even dove into the previous month's high yet. As a matter of fact, we're right at that month's close, right? Which is significant because we could start to sell down into it. However, it's significant to note on the 3 month, but until this candle closes, we won't know exactly where this price is headed. All right. But we should definitely note where we're looking like so far. Moving over to the monthly, which is something I definitely take a look at the end of the month, because now we have a completed candle in regards to how we're finished. The last 4 months have gone straight up to the top. And now finally, we're getting a little bit of selling in comparison to the previous 2 months. What we talked about in my previous video, we talked about how small this month inside of the weekly candles, how small the distribution it was getting to the highs, which was a sign that the bulls were getting a little bit exhausted. Now you see that exhaustion being followed up by some selling, either some profit taking or eventually selling back down to some lows. Now, everybody will tell you that the market has to sell off to go higher, and I would beg to differ. What I will say is when the market is ready to sell, we'll know, defined objectively by the structural nuances in price. That's what you want to focus on. And right now, the monthly candle is starting off bearish. Has it done anything that tells me we're going to the downside yet? The answer is absolutely not. 62.2250, a closure below this level on a smaller time frame, i.e. a weekly or daily, will be something that I'll take in consideration. But as it stands right now, there is nothing that the monthly candle has given me other than a little bit of selling that can tell me, hey, we're definitely going to the bearish side. Therefore, on the monthly time frame thus far, I still have to give the nod to the bulls objectively. All right, let's move over to the weekly time frame. And again, we see that acceleration of sell pressure kicking in aggressively on the weekly time frame. You add in all of the job report information, the fundamentals, and everything that we got on Friday, and you would think that if sellers were truly in control, I would like to see them have broken through the low of 62.41 and eventually started stabbing into this particular candle here. Unfortunately, unfortunately, if you're a bear, what I got was the market held this low to a T, put in a double bottom, and then slightly found buyers. What I would like to see to continue to be bearish, I would actually like to see a gap down, right? And further mitigation of this area here before finding a pushback up to the highs, right? Secondarily, what I would like to see to be a bear, if I don't get the gap down, I don't mind a gap up from here. I don't, because we're technically still in premium. But I don't want price to start pushing more than 50% of this particular weekly candle. If that happens, then it's going to make me believe that the market is once again, finding buyers, trapping sellers, because if we gap up, guess what? Everybody that was selling the market, swinging the market, starting new sell positions at the low, they will immediately be in pain, and the market will be inclined to continue to push higher to stop these people out of their positions. Therefore, from the weekly time frame, we want the change of character below 62.41, which reiterates the level that we saw on the monthly time frame. Dropping down to the daily time frame, we get again more of the same. Now here we can start to see price leaning toward being bearish, right? This is the first time if we were to bring out the 200 EMA, which I don't know if I have it loaded in here, but we can load it up real quick just for illustration purposes, right? So we bring out the 200, right? And we look at the 200 EMA, we can see we're clearly still trading above it. But for the first time on the lower time frames, you'll start to see on the 1 hour, we're starting to trade beneath the 200 EMA, right? That's the first signal that, hey, maybe the market's turning. The second signal, what you want to see is you want to see gaps in price, right? You see this little imbalance here between 63.60 and 63.75. That's a sign that price is starting to turn bearish. Lastly, you want to see a break of structure followed by a potential change in character. The character switches on the daily time frame when a swing low, not an intermediate low, but a swing low has been taken. That swing low, guess what? 62.41.50. It's the same level you're going to consistently see because time is fractal, right? When this low starts to get taken out, right, the actual swing is here, but because we've consolidated, we created a new swing point from here, right? But this is going to be the change of character for me, right? When we break through this with volume and we close below here, then I will scream from the rooftops, it's time to get short on pullbacks. Until then, this area is going to continue to be an area where buyers can very well step into the market and take us right back up, right? If you're a bear, right? If you're a bull, what you want to see is you don't want to see price get stuck at this imbalance. 63.71 or 63.61.75 on the S&P 500 is most likely the 50% mark, right? You've heard, the golden pocket, right? 50 to 61.8, 63.78 to roughly about 63.55.75 is the golden pocket of price. So you don't want to see price start to push or hit this level and start to retrace if you're a bull. You want to see us go up here, maybe retrace a little bit back into 50% of this candle, and then start pushing for more all-time highs. If you're a bear, you are watching this level significantly because this is the gap in price that you want to see be retested and fail, right? You either want to see a gap down and continuation, or you want to see a retest of this level and us continue down to the bottom. And like I said, the nod goes to the bears on the lower time frame. On the higher time frame, the bulls are very much still in charge. So we'll have to see tonight. The move in Tokyo and London is going to be very significant in relationship to where we're looking for price to go. All right, let's drop down to the 4-hour time frame and I'll bring out my levels on the week. I'll kind of give you an idea of where I'm looking for price to go on the week, and we can go from there, right? It's just projections, right? You don't have to use these to trade, right? I use them as projections to get me in the direction of where price should be delivering from, right? So as per usual, if we're going to be bullish, you want to see the market trade down first, right? Below us, we have a daily demand zone, right? And we have a 4-hour fair value gap. These are targets or areas of inefficiency that the market will target if it starts to come down. If it comes down from the demand zone, we're looking at about 3.01% over the last 7 weeks of price action. That's been our projection, right? So 3.01% puts us back up to 63.48 or right into this 4-hour resistance zone. We'd be breaking down, tapping into this level, and then going right into the demand or right into the 4-hour resistance. We were in the week up about 3.01%, right? Go down to come up. From the lower level, the 4-hour fair value gap, I'm looking for about 3% back to the upside into 63.75 from 61.78.75, right? So essentially everything leads back to this resistance zone if we're going to go bullish or if we're going to go back up to be bullish, right? So we would also land right again at that 63.41 level. We'd be above that level and then heading back to the upside. Remember, 63.41 is going to be the line in the sand to be a bull or a bear, in my opinion, right? So if we're going to be bears, we want to see the market trade up to come down. Well, this 4-hour resistance zone becomes a level of interest once again to the downside. Again, 63.41, right? The same thing I've been saying off the monthly. 63.41, 63.45. This area will be significant for price. If we trade back into this area, I'm looking for about 2.92% to the downside. of our weekly projection, we'd be looking for about 6160.25. Okay. 6160.25 is what we'd be looking for to the downside from that area. From the high, if we can't trade above, if we can't trade into the 4-hour resistance zone, then we need to trade into the chessboard high. The chessboard high actually sits where the daily fib is at 6306.50. And from that area, I'd be looking for 2.94%, looking for the market to target 6129 and potentially lower. Before I leave you, the last thought that I would leave you with is understand that if the move is to the downside, right, and we gap down to come lower, these levels will be increased significantly. 2.92% and 3% is the weekly projection based on the last 7 weeks. Well, if you look at the chart over the last 7 weeks, that includes a lot of consolidation. What it doesn't include is a lot of volatility and a lot of downside pressure. As the volatility increases, the downside pressure will increase, which will in turn increase the weekly projections inside of this week. So take these with a grain of salt. If the market gets very volatile, we could be all the way down targeting weekly fib from June 23rd and the monthly fib from 66 or 60.66. These levels are important because the market has not retested them, i.e. mitigated them yet. All right. So those are my thoughts on the S&P 500. Let's move over to the NASDAQ, another popular instrument that we all love to trade, right? I won't reiterate everything that I said, but I'll just say, hey, look at the 3-month candle, and it definitely looks very similar to the 3-month candle on ES, right? We take a look at the monthly candle, again, same significance, right? We got a doji candle at the top of trend. This is a spinning top potential. What we get out of spinning tops is they indicate the top of a trend. And then right after that, we usually get a baptismal to the downside. The market drops aggressively to the downside after receiving a spinning top. However, it doesn't mean that it's over. The bears still have to do their job. 22,567.75 is going to be the indication that the spinning top is playing itself out if we can close below this level on lower time frame. We go down to the weekly time frame, we get that same thesis that we talked about on the S&P 500, whereas this low here needs to break. This is the structural low that brought this last structural high. We are now currently validating this high, right? This high is not validated unless it breaks through this low. Thus far, all we've done is validate the low. So we'll see what the market chooses to do at the opening of the session tonight, right? If we can break through the 567 level, which is down here, this low here, then expect the market to start to trade into this weekly demand zone. And this is where I'm going to be looking for the bounce out of the market, the initial bounce, not to go all the way back up, but this is where I'll be looking for the first bounce to come from for multiple reasons on the NASDAQ. The first reason, let me turn this magnet off. This is annoying me. The first reason is that this is a demand zone, right? If we look, it's the perfect definition of a demand zone. A consolidation, a rally, a base, a rally, followed by a break of structure and strong buying. Hits all of my demand zone levels. Perfect. Okay. The second reason, if we drag it back, this is also the previous high, right? Previous all-time highs tend to be a magnet for price on the first pullback. How we react to this previous all-time high is going to give you a very clear sign of what the intentions of bears and bulls are. If we trade straight through this thing like butter, I think you know the answer. If we come into this area, we use it as a retracement and we aggressively buy out of here, then I think you know the answer there as well, right? So this area between 424, 22,424 and 21,566 will be very, very key going into the following week. All right. Let's go into the daily time frame, and we can see that that structure is clearly being broken, right? It's not even like a second guess on the NASDAQ. You can see that the previous low was here at 23,305. We created a gap in price there and inefficiency, right? And now we're breaking through multiple lows, and we're doing it with strong volume. You don't need the volume bars to tell you that there's a lot of volume in these candles. You can see it in the bodies of the candles. So what's the next target? The targets has to be these equal lows at 22,591, which you'll hear me reiterate multiple times. And then we're going to target this low at 391, which is the low, right? The pivot point that brought this high, right? After we get through there, then the consolidation will be the next level. And we'll talk about that further as we bring out the 4-hour time frame. We go into the 4-hour time frame. The first thing I want to do is I want to bring out my top down analysis so we can kind of break down exactly where price is headed and how I see it being delivered on the week. Things to note: above us, we have a 4-hour resistance. There's a gap in inefficiency in price. There's another one up here. It's a true fair value gap, followed by a supply zone. We have our chessboard in the middle. And then right here is an 8-hour fair or 4-hour fair value gap. I'm sorry, between roughly 22,654, 22,586. Those levels will be laid out daily inside of the pre-market plan. So just referencing them on the top-down analysis. So later when you hear them Monday through Friday, you'll understand where those levels came from. Beneath us is a daily fair value gap. Very huge area, 22,382 through roughly about 22,092. It's going to be a ton of liquidity in this area. So if we come down here, this will be our bearish projection, but it'll be a great area to get to long the market. Also, we have weekly fib and monthly fib that has yet to be mitigated, just like we did on the S&P 500. All right. So that being said, what am I looking for? To be a bull, you want to see the market trade down first, right? If we trade down, we have a great inefficiency that needs to be filled at 22,660, basically the top of this 4-hour fair value gap. We close the fair value gap, we rally back up. We're looking for about 3.56% over the last 7 weeks, and we're looking at 23,469.25. If we can't even trade that low, right, and we've already started to develop somewhat of a structure here, we base out and we hold the chessboard low. What I'd be looking for from the chessboard low is, again, 3.52%, give or take, from 22,870, which is like the middle of the chessboard. We rally up to 23,687, which again would indicate a lower high being placed inside the market, or the market looking to go higher through this level. So we'll see how the bullish side delivers. Right now, again, we're leaning more toward being bears, but not at the low. All right. If I want to be a bear, I want to see the market trade up first, or vice versa, give us a huge gap to the downside, right? But if it trades up first, I want to see it retest this 4-hour resistance zone, close this inefficiency up near the monthly fib and the weekly fib, right? And then rally or drop back down toward 3.47% into 22,429.75, which puts us right near that daily fair value gap that we discussed. If it can't get back up to this 4-hour resistance, chooses to leave these gaps open, then I'm looking for the market to trade up into the daily fib at 23,061.25, which is the top of the chessboard as well. We trade down again 3.49% into the week, and we're looking at 22,255.75. Same thesis applies here. If we start to trade down aggressively, the volatility index will increase, the projections will increase, and we'll blow past all of this stuff. But a lot of times what I see is when we do that, to revert back, we end up trading right back up to these levels to end the week. All right. So watch out for that as well. All right. Moving on to the Dow Jones, the last of my predictions or weekly projections, we can see that the monthly candle or the 3-month candle on the Dow Jones looks a lot more convincing to the downside, right? The Dow Jones is usually what I call the truth teller of the three. It usually starts to tell the truth a lot faster than the NASDAQ and ES, right? It's less manipulated because there's a smaller amount of stocks inside of the Dow Jones versus the ES and NQ. So they can't manipulate it as easily, right? So therefore you end up getting true price action out of the Dow Jones. We look at the 3-month chart, we swept the highs, right? After running the lows, we came back up and swept the highs. This is the potential announcement of a true bearish trend. That means that the target is probably going to be this wick low here at 36,763. Don't at me, bro. I know it's far away, but if the market truly crashes, this is definitely going to be the target, right? So let's drop down to the monthly time frame, and we can start to see again the Dow Jones is presenting the candle that the NASDAQ and ES are just now getting, right? This candle was presented last month on the Dow Jones. This is a rejection candle. It is an inverted hammer followed by a break of the low already, right? If we close below 44,000, basically 43,979, whatever the low of this candle is, 43,973, right? If we close below this to end of the month, this is going to be the target, right? People are not going to believe me when I say this, but the target is most likely going to be 36,707, right? Again, maybe I'm crazy, maybe I'm not, but that's how I'm looking at price right now, right? We look at the weekly time frame, and again, more definitive price action coming out of the Dow Jones because it's less manipulated. We ran the low of the range, right? We ran the high of the range. Whenever I see this, this means that this now is the true dealing range, and the bears are looking to take over, and they're gonna target somewhere down here. They may not target the low exactly. They could put in a lower high, but they could start to target very, very low. And again, when people see it, they're gonna freak out. But at the same time, it's structure. This is our third time coming up here. 1, 2, 3. The market likes to move in threes. And if it's going to dump, it's going to target these lows down here. So I'll see you guys, 6,000 points from now, right? And then people will be like, oh my God. I'm like, yeah, I don't know. Structure was telling us. But anyway, the first thing you want to see if you're a bull, you want to see 43,216 hold. You at least want to see them defend this, because if they melt through this level, yeah, we're definitely going past here. Like, definitely, right? So if you're a bull, you want to see this level hold. If you're a bear, you want to see the market absolutely wrecking ball this thing, right? You want to see them come down aggressively. You don't even want to see a pullback, right? You just want to see it go, gap and straight go. So we'll see how they deliver it. We'll see how bad this news truly is, right? But again, there's a lot of people that are bearish on the market, and that makes me very, very nervous, right? Very nervous. I hate to be a part of the majority, but I just got to call a spade a spade. And what I'm seeing out of the market is a lot of bearish signals, like a lot of them, right? So now we look at the daily time frame, and we can see we got our double top, we got our break of structure. Again, the Dow is just clean, man. It is telling you very cleanly, this is what I'm doing. You can get on board with it. You can believe me or you cannot believe me. So retracements, what are we looking for? We're going to be looking for a retracement back into the 61.8 or the 50% retracement, 44,495 through roughly about 44,636. I had a level of 44,777 that I talked about extensively inside of the Discord. And I kept saying, as long as we're above this level, the market's going to continue to buy. The second we get below this level, the market's going to start dumping. And I'll be damned if we didn't dump directly from that level on a retracement the other day. And it was crazy to watch, right? But again, we're coming into a fair value gap area, the daily fair value gap, which I'm sure we'll talk about on the lower time frames. So right now, I think it's a good time to look for the market to push back up. Unless it just opens up below this level, then it's going to be a big problem, right? All right, so let's break down the 4-hour time frame. Let's bring back our levels for the week, and I'll give you like my projections for the week. All right, so for the Dow Jones, levels to note, right? Our extreme high, or our ceiling, is the daily supply zone that sits up at about 44,934. Again, above that key level that we just talked about at 44,777. I drew this level 2 weeks ago, and you could just see how it's been reacting to price ever since, right? It's not that I'm right. I'm just reading what the market is doing, right? Also, things to note is on the 6-hour time frame, we have a very nice base drop here, right? Which signifies an area of inefficiency, right? The base drop created the fair value gap, which is what I'll be looking for price to trade back into. Going back to the 4-hour, we have our chessboard, and then below us, we have a daily demand zone, right? And then below that, we have another daily demand zone. And in between all of that, monthly fib and weekly fib that previously never got mitigated. And I said, hey, I'm leaving this on my chart because I know how the market moves. We're going to be coming back here at some point to mitigate this level. Well, we're here, right? So let's break out our levels, and I already brought out my levels. Let's talk about the actual projection on the day. So if we're going to be bullish, again, we want to see the market trade down into a key level or an inefficiency to go back up. That key level is right here. We're sitting right on it, right? So from the demand zone at 43,322, right? So 43,322 is basically the center of the demand zone. I'd be looking for price to rally back up 3.10% into 44,643, right? That's our weekly projection based off the last 7 weeks. 3.09%, which basically puts us inside of the 44,077 level. That's basically if we just hold this top here, we hold the previous day low, maybe sweep it, and then continue going higher. From there, if we break below the monthly fib and weekly fib, I'm not really looking at that as bullish. Therefore, my separate plan to be a bear, I want to see the market trade back into the 6-hour resistance zone at 44,150, trade down about 3% into 42,809. To be a bear secondarily, I don't want to really see the market get back above the daily fib, to be honest. But if it does, I'd be looking for the market to reject the daily fib, target 3.06% into 40 or 42,552 from 43,894, which is the daily fib. Again, I will note, as I did all other previous instruments, that in the event that we start to gap down, the volatility index will gap up, which means the projections that I am previously measuring off the last 7 weeks will start to increase. Therefore, if you see this thing aggressively below 3%, I don't even want to hear it. I already told you, right? So last but not least, let's break down the volatility index, right? I didn't have it on the thing, so I'll just switch it up over here, right? We'll come down to the volatility index. And last week, I don't know where my levels are, but last week I talked extensively about the fact that the VIX was sitting down here marinating, right? Extensively about this. And I said, hey, whenever I see the VIX stay in one spot for too long and we manipulate down, it's a sign that we've probably reached the top. At the same time we were down here at this level at the 17s, the market was consolidating at the high. The market swept the high, the VIX swept the low, and then the market sold off while the VIX pumped. The VIX is a direct correlation of the S&P 500's options market. That being said, when people are selling options, the VIX will not lie to you. When people are buying options, the VIX will not lie to you. Right now, the VIX is screaming, get out of my way. If the VIX is able to get above this order block right here, right? i.e., for numbers' sake, if the VIX trades above 23,135, stand the F buy on the market, right? That's all I got to say. If the VIX gets above this level, it will start to target this upside all the way up here to about the 40s. If we get back to a 40, 41 VIX, it's going to go higher because the first time we got up here, it was just a quick scare. The next time we come up here, we're going to run that, which means there's going to be increased amount of fear. And if you think I'm joking, go back and look at the weekly candle and look at what happened during COVID, right? When this market starts to get scary, it can get really fearful. It can get really scary in the market. During COVID, we reached a level of 80.665 on this particular VIX chart. I've seen other VIX charts where we reached levels into the hundreds, right? When the VIX gets like that, the volatility will go crazy. So looking at the weekly time frame, all we need to do is start trading above the 23s. If we get above these 23s, it's going to be night for this market, right? So this is why I say this could just be a pullback. But if the VIX starts getting on board, it means that true selling is coming into this market, and I'll be watching for a massive dump out of this market, like crash territory. But I'm trying to chill on that word because every time we get down here, we get a pullback, everybody starts talking that, and I just want to stay calm and wait for the signs to appear. I know what they are, and I'll just wait for them to actually appear. That being said, let's move over to the news on the week. We can talk about the things that are coming in for this week. One thing that I wanted to mention in regards to the structure before we talk about the news, however, is that a lot of times right after a great dump like that, we get consolidation. We get it on the higher time frames. Therefore, it starts to bleed into the smaller time frames. So be careful this week of a potential for consolidation. The fundamentals usually lead you into believing that we are going to consolidate. Well, the fundamentals are telling me that so far in regards to the news. We have a very low impact news week, and that's usually a sign whether the market potentially can line up for consolidation. Monday, hardly any news, right? It's what is this, Canadian whatever, I don't know what this is. I think it's a bank holiday for somebody, but ultimately in New York, right, in our market, there's really not a lot of information coming out, so you already know that's going to be a high resistance type day, right? Because the market is going to be generating the liquidity to do whatever it plans on doing the rest of the week. All right. And then on Tuesday, we do get red folder news. We got ISM services at 10 o'clock. And prior to that, we have final services PMI at 9:45. Going into August 6th, that Wednesday, again, back to no news. We do have a bond auction at 1 p.m. But if you trade like me, we ain't even going to be in the market by that time, right? But crude oil inventories, and then a bunch of FOMC speakers. If anybody's been around the market long enough, you know that when you see a lineup of FOMC speakers, it's probably a day the market's going to do some stupid stuff like stay in a range all day. Because this person is going to say something to make them buy. This person is going to say something to make the algo sell, and vice versa. With no news on a Wednesday, we'll see what happens, right? Moving into Thursday, unemployment claims is always going to be read for their news. And right now, the attention is really narrowly focused on those numbers. As you guys know, if you don't, Trump actually fired the person that calculates those numbers after missing the bill by 256,000 jobs, right? That is what the market is being rocked to right now. So we'll see what happens, but ultimately not a bunch of news this week, right? Moving over to the last day of the week, which is Friday, again, finishes the week the same way it starts it. A lot of FOMC speaker, but nothing significant in relationship to red folder news. So just be careful. A lot of people made a lot of money going to the downside last week. A lot of people made a lot of money in the market and expecting more volatility. The best way to trap those people is put them in a range where they're looking to make those big numbers and the market just stalls out, right? So just be careful moving into this week where we don't hit either one of those projections. We literally just sit in a range, right? So those things I wanted to warn you about. Now, moving on to last but not least, which is the earnings that could bring that extra volatility that we need into the market. We'll talk about Palantir because that's a big one. Palantir is on Monday after the close. Hims and hers is going to be a big one for those of you that are trading the meme stocks. They're going to be reporting on Monday after the close. So if you're not aware of that and you're in that trade, you might want to pay attention to what's going on. Caterpillar, Pfizer, and all of the energy companies are going to be reporting this week as well. If you're trading the Dow Jones, you want to pay attention to what they do because a lot of the Dow Jones stocks report before the open, which means that you're going to get huge spikes out of the Dow, either up or down, prior to the pre-market, right? So just be aware when you're in the market, if you're trading London, understand that there is news, and Caterpillar is a big company. It will, without a shadow of a doubt, move the Dow Jones. Just throwing that out there. After the close, we have AMD, which has been going on an absolute tear to the upside. It's similar to an NVIDIA play. It's actually like the sister play to NVIDIA. So people will be watching AMD in preparation for NVIDIA earnings over the next 25 days. They will be seeing how AMD reports. And if AMD gives you a sneak peek of any failures, they're going to start selling NVIDIA. Okay. So just take that into consideration, right? And then we have on Wednesday before the open, Uber, Shopify. These are all things that are going to move all markets. McDonald's is a huge one for you Dow Jones traders. I saw McDonald's drop one time, and that's all I needed to see to understand how it can affect the Dow Jones. If McDonald's pumps or dumps, it will affect the Dow Jones. So pay attention to that, right? Moving over, we got DraftKings and a bunch of nobodies really reporting on Wednesday. I won't call them nobodies. I'll just say that they're not huge market caps, so they're not going to move the market like you would think. The rest of the week is pretty much the same over and over, but again, it's just a repeat of energy and things such as that. I just thought this was significant to go over because of the AMD, the Palantir, and Caterpillar. So I wanted to put you guys on notice that those things were happening. That being said, ladies and gentlemen, that is all I have for the top-down analysis. I hope this was helpful to you. If you have any additional questions or you want me to break down any other instruments inside the Discord, just go ahead and DM me or, at me in the chat. It's fine. We'll break that down at a later date. If you haven't joined the Discord yet, or you haven't subscribed to the channel, please make sure you tip the barbers, AKA hit the like and subscribe button. If you're interested in joining the Discord, the link to the Discord is in the description down below. That being said, my name is T Hobbs. This is the Trader Shop, and I'll catch you guys on the next one, man. Peace.